Welcome back to another episode of the Backholder Pod. Today specifically, of course, we're going to talk about the fan favorite, which is Tesla. And more importantly, stay till the end where we'll provide a little bit more commentary with regards to the markets recently. So of course, remember to help smash that cute little like button while you're at it. But I think before we begin, before I hand the time over to Bunti, where he'll share with you some of his very cute graphs and interesting analysis, there was a very interesting price movement with regards to Tesla before or after its deliveries results. So in the pre-market, it was actually trading down. I think was in the rates of around -2 to -3%. And after it went through a turmoil, the market actually traded upwards and Tesla actually closed green. But I think subsequently the next day, because it was a general weak market sentiments, that's why I think stocks across the board all suffered. I think we are looking at a red day today. So before we head on, I'll just pass the time over to Bunti. Bunti, maybe you'll walk us through what exactly happened to Tesla's deliveries.
Okay, so actually nothing much. So what happened is that they just released the quarterly delivery numbers. So usually it's like second day of the closing of the quarter, they will release these numbers lah. And what I did is just like take in the production numbers and the delivery numbers and just put onto the table and then put some charts lah. Nothing fancy here. But I think quite interesting is that people looking at the chart on the right hand side, right? You see the deliveries numbers going up, straight line, all goods. But the recent quarter, which is 2023 Q3, you see there's a dip here, right? Sequential drop here. Looks quite scary. And then of course, the production number also dropped. So I think Tesla community, there are people who are concerned, like, okay, is this something that is a big concern, right? Big issues. You look at the delivery year-over-year growth rate is 26.5%. It's no longer like the 40, 50, 80% growth in the past, right? So are they slowing down? Or is it like people stop buying Tesla because like competitors are catching up? So I think these are the questions that people ask. That's why I just want to raise these questions here for discussion in this group.
Maybe you want to first provide your own conclusion. So is this supposed to be a concern for the Tesla community in this recent sequential drop?
I think for me, not a concern because we know that in the quarter they launched a new Model 3, right? So of course when there's a new model coming in, they need to change something on their manufacturing process. So they will be shut down needed just to make all these changes. So it is understandable that there will be some drop in the production and delivery. And actually, during the last quarterly earnings, I think Elon also mentioned that they expect that there will be a sequential drop now. So that's why there's nothing too concerning. But with that said, because after all this they communicated, right? But yet the numbers is still lower than expected. That's why the price didn't moon after the results was out. But if you ask me whether I'm concerned or not, personally, I'm not.
Also, a caveat, if I'm not wrong, they did say that they're still on track to delivering 1.8 million this year. So if they make that statement, I would presume that they're gonna deliver. Maybe I'll pivot over to Eric, which is the biggest Tesla bull in this camp. So I think production is one side, right? Then the other side of the equation is deliveries. So there is this common narrative, or at least this common thread that I see many bears are talking about on Twitter as well, saying that Tesla has been reducing prices as we know in the last few quarters, right? So they're saying that even after reducing prices, they can't really deliver at least compared to the expected amounts of what they can sell. And not only that, I think margins might be taking a hit. So are this confluence of factors, would it be an issue from your perspective, at least for Tesla's upcoming few quarters?
I think the forecast that they given and they are keeping to their targets, right, bodes very well for at least this year, 2023. So I'm not too concerned. And I'm actually looking at the inventory numbers, right? They are not really very high though. It's like pretty low globally. So I won't say that they lack the demand. I mean, if they really lack the demand, right, then I think it will be quite strange, because they already have the $8,000 tax credit and all those things, making their EVs like I think one of the cheapest on the market. So demand is probably okay at this price point. That's why I think Tesla has somewhat like chilled off the price cutting. So Yeah, I think they are doing fairly okay. I think a bit unreasonable at this point in time where, China, the biggest market, right? I think domestically they're not really doing very super duper well from some of the reports that I see lah. And the unemployment rate and all those things. But I think the yet the sales there is not like it didn't fall off a cliff. So I think that is something that I take heart in. I think it's not that bad. And the thing that I'm most looking forward to is the Cybertruck launching. I think next year this Cybertruck will be quite a significant contributor lah. Yeah, as they ramp up. I think now they're just this year probably they'll deliver like a few. There are quite a few reports of Cybertrucks like just driving around in the US. So I think those are the initial employee sales or something like that. And because they are not officially launched yet, as far as I know. Yeah, so that is something very exciting for me. Looking forward to it for like 3 years really.
Right, I think if I can provide more color on the Chinese part, I think it's generally true from what we have been reading in terms of headline numbers and stuff. But I believe electric vehicle is like a monster on its own. It doesn't seem phased. So I think not only Tesla actually, I think even BYD, NIO, they all achieve record sales, record numbers, even though everybody's saying that the Chinese economy is collapsing, but I don't know where they're getting their money to buy all this electric vehicle and transitioning over to EVs. That's one part. And I think on the second part, you are looking at some sort of a K-shaped kind of movement in terms of the Chinese economy where your normal property sector, everything's on a downtrend, doesn't look good. And because it's a huge part of the GDP, that's why you're even looking at signs of deflation. But I think recently it's in the latest month at least, suddenly the number got reversed back to the positive again, and services are slowly, which is I guess engineered by the government. They want a larger part of the economy to be taken over by services, but it's gonna take a long time. So that's just additional pointer from me about China. Then Kelvin, any concluding thoughts before we move over to broader market outlook on Tesla specifically?
I think people are they see too closely at the
Too sensitive.
delivery numbers lah. Like if you think that Tesla is not just a car company, why are you just looking at the car delivery numbers? You should also focus on other stuff like full self-driving. What is its progress? So that recently Dojo thing, they managed to make it start working already. So it's already training their full self-driving thing. So there's another one step closer to full self-driving, to solving the full self-driving. And the robotics, I think they managed to demo that robotics picking up something, sorting it by colors, even though it's doing it a bit slowly lah, but there's still progress lah. All the other car companies are joining Tesla's supercharger standard, so that's another new recurring revenue for them. So all these things are happening at the same time, or not to mention the next gen platform, which will be their budget models and stuff like that. So, adding with what Eric mentioned just now, the Cybertruck, from the reviews that I see online, a lot of people hate Cybertruck for some reason. It looks ugly lah. Hopefully, the demand is not as bad as I imagined. But yeah, Tesla is more than just the delivery numbers itself lah. So I wouldn't worry about that just because there's already we can see progress happening everywhere lah.
I think that very much sums up the discussion around Tesla. I think you can't really blame them for being sensitive or short-sighted in a way. I think that's the game Wall Street is playing. That's why there's so much excitement, volatility around the market's day-to-day movements, right? Everybody's trying to attribute to, oh, why is it up today? Why is it down today?
I think I was just looking at this article from Barron's, right? They were talking about the UAW strike at the Ford GM. I find it really very interesting. I'm sorry, this has nothing to do with the general market, but maybe you can edit this forward to the Tesla bit. They actually lay off workers, right, at the plant that did not have the strike. So okay, so not everybody is striking lah at the big three, right? The Ford, GM, and Stellantis. Not everyone is striking. So they have like 25,000 people striking and all those things. So certain plants are closed down. And then those people who at another plant, right, they never strike. Then I think the Ford, right, they lay off the people at those plant, like a few hundred people, and then GM also lay off at a 100 plus people at another plant, and these people are not striking lah. So then they say, right, because they are the consequence of the strike at the other plant that supplies this plant. So if the other plant that supplies this plant striking, right, so you don't have the materials, then this plant cannot work, mah. So even if you're not striking, right, we still gotta lay you off because there's nothing for you to do. So I don't know. This is how is this going to end? Because the offer, right, that UAW is proposing, right, is like 40% pay increment, those kind of things, and it's across like quite a big number of workers. They have tens of thousands of workers in the US. So if they were to really accede to their request, I think it bodes very, very badly for, I think, the big three auto company. Of course, some people will think that, oh, wow, then it's a huge win for Tesla. But I don't know. I think if the economy is badly hit by this, I think you will also come back to bite Tesla in a way, because what we want is a stable transitioning from combustion to EV ma. You don't want a disorderly collapse, implosion of the combustion, and then there's a vacuum, you see. Tesla cannot ramp up like crazy 20 million in 1 year. They can't do it. So if there's a vacuum, then what happens?
No
And
lah,
if,
they will
yeah,
come to middle and agree lah. So this is just part of the how the game is played lah. So the initial demand will be very high lah, but they will have to agree somehow. It's a bit
mm,
like US politicians talking about government shutdown. They still have to come together and come up with something. Yeah, some part of it is really for show lah. Yeah, need to wayang a bit.
wayang a bit. So who actually benefits? Go along the lines of the incentive. Nobody
I
benefits.
I don't want to speculate. I also don't know. Didn't follow that closely. Just wait for how they conclude, and then we see how it progress now.
Okay, so that was like just an interesting tidbit.
Yep, good sharing.
So I think I just wanted to pivot over to just broader market discussions, right? I don't know whether you guys have the same feeling or the same observation, but it feels to me like markets are very, or at least market participants are very, how do I put it? Very moody. I don't know if moody is a right word. So let me explain why I think it's moody. So on one hand, I think many people are very skeptical moving into 2023 because we just came off the bear market, right, in 2022. So in 2023, everybody said that, wow, this bear market is going to last even longer, recession is going to come. And then they see, wow, Meta 100, 200%. Wow, Nvidia 200, 300%. Then all cannot believe their eyes. Wow, it keeps climbing and climbing and climbing this whole year. It climbs, climbs, climbs. Then everybody say, okay, guys, recession is cancelled. We pang gang already. Federal Reserve say, okay, we managed to have a very graceful soft landing. That's what they call it. Then now markets start to have a bit of a shake off, and then it's not even a bear market. Like technically it's not even a bear market. It's just a short drawdown or maybe a retracement, as some traders like to call it. They say, wow, guys, see, wow, Eurozone, Germany in recession, China property collapse coming, the US debt sky high. And then suddenly the narrative change again. Everybody say, okay, it's coming already, it's coming already. So I just wanted to get your perspective. I feel like a lot of people are confused. They are trying to find a lot of reasons to justify why the market is moving. Truth be told, now I honestly don't have a position. I don't know what's going on. I still stay invested, but I don't know how to make do of so many noise and so many people having different opinions of the market today. I just wanted to know whether you guys have the same feeling or not. Maybe I'll pass it down over to Eric first.
Pass to me. Actually, I also don't really have an idea what's going on in the market. They're just like, yeah, like what you say, like gyrating quite a bit, up and down, up and down, up and down. But if you look at the S&P chart, right, we don't never really move much, yeah, for since like June until now. We're back to like the same place. We went up quite a bit, fair bit, and then after that we came down again. So it's like maybe 4 months, we didn't really do anything much. So even if this time round pulls back like 10%, I still think we are still pretty okay. I remember the last time, few months ago, I think Mr. Lu was making this video saying that, oh, he was buying S&P when it's like 3,008 or something like that.
Correct.
Yeah, that kind of level. Can you imagine if we drop 10% from here? It will be around 3,008. That's like, isn't it around the same level that just earlier this year we were having? So I don't know. I don't feel that the market is really correcting a lot. But the inflation data is like super sticky. I'm like, how long is the federal going to keep the rates at this level? Yeah, I also not very sure lah. But for sure, the inflation is biting pretty badly. Like everything is going up in price, electricity, water.
Eric sounds like out of market for too long already. Didn't keep track on all these things. It's
Yeah,
like
yeah, yeah.
market volatility. I don't feel anything.
Yeah. Just focus on doing my own business lah. Like
Yeah.
because market is like a bit directionless. Like so I also don't know like okay, we go in also then after that it pull back again. Then we sell, then after that it go up again. So it's like quite meaningless. We don't really have a direction. We're not at a sufficiently low level. You think so also, right? I think it was from Bunti's chart the other time you were sharing. I think you shared a chart about the
He shared a chart of Nvidia going 20,000 or so. Well, you can treat his chart from
no
properly.
lah. I think one thing when you talk to Bunti, right, you gotta know when he's joking. If not everything you take as gospel truth, then
Yeah, I think come back to like, we talk about Tesla, right? Okay, I need to come back to that part again because I say that when I look at the Q3 delivery numbers, I'm not concerned. But if we look broader, not just Tesla, I mean broader economies, and if we just look longer, not talking about Q3, we're talking about not just this year, maybe just 1 year later, 2 year later. Actually, I'm turning a bit cautious also. And the reason why I'm turning cautious and probably deploy more into, like T-bills, like talking about CPF, right? It's also because I really feel that all these, so-called the monetary tightenings, right, is coming and really can see the pain in the markets. Maybe it come in very slowly. For now, maybe we don't see so much in stock market, but if you observe on the bond market, right, actually, the bond market almost we can describe it as like a mini meltdown already. Let me show the screen sharing first. Hold on a second. Okay, the chart that I'm showing here, right? This is US 10-year treasury rate. So what it means is that if you buy a 10-year US bonds, you will get 4.7% return for 10 years if you hold that bond until maturity. So this 4.7%, right, is like if you just compare to maybe just early this year, we're talking about 3.5%. Now suddenly 4.7, 4.8%. It's really like went up a lot. So interest rate went up, meaning, bond price came down. Or you can say that it's almost, if you invert this, you can see that the bond market is like melting down. And why is it the case? You can say that, okay, this can be attributed to Federal Reserve tightening, or I mean, US fiscal side also got problem and they don't have money. They need to issue more bonds just to pay interest. I think there's a lot of all these stories. But what the point is that, right, we cannot see the stock market as like an isolated stock market. You have to look at different market. Like there's a stock market, there's a bond market, there's commodity. Like all these, right, they will have some sort of like, relation to each other because they affect each other. Because right now, if the bond market is collapsing down and if you put money into bonds, right, you can get close to 5%. Then why should you put more, like a lot more money into stocks, right? Because risk-free alternative already give you close to 5%. It's really a good alternative. So I do think that this kind of pattern, if it continues, right, it is like indicators. It could be indicators like stock market will perform badly over the short term. So I think that's why I turn a bit more cautious now and saving more cash now.
Kelvin, any thoughts on this?
This is Punti's chart, but extrapolated backwards. So whenever the bond yield shot up, it just so happened it coincides with a market crash. But it doesn't mean that there'll be a market crash this time. It just means that bonds are more attractive right now. And I share Punti's sentiment that because the risk-free rate right now is already 5%. So why would you risk losing money than just earning a guaranteed 5% return? So this could signal that investors will be more willing to park their money into bonds, which means that they might be selling off their stock holdings. At least the not so long-term people, the traders and so on, they'll just be parking their money into bonds, selling their stock holdings. So I'm also becoming a bit cautious right now. So, I also haven't been buying too many stocks right now also.
I think maybe I'll just want to add a different texture also. So I think when you look at the broad indices, it looks very good. So the QQQ is up like 30-50%. The SPY, despite the retracement, is still up like I think 10, still double digits, like 10, 9, 10%. But when you really look at it, there is this whole discussion around the Mag 7, the Magnificent 7, like your Nvidia, Tesla, Apple, Microsoft. They essentially carry your index because if you go and Google a S&P 500 equal weight index, meaning when they equal weight all the components of the S&P 500, anyone want to take a guess? I don't know whether you guys have searched, but would you want to take a guess? What's the performance year to date for equal weight?
Close to 0%. It should
It's
be.
negative really. I think it's -2 now based on what I'm searching. So actually, in general, if you equal weight everything, doesn't really show a very strong picture that wow, everything is benefiting. But clearly, if you look at it on an overall basis, there are very strong companies that is riding on this trend. Your Nvidias, your Tesla, your Facebook, they are propping up the indexes. So maybe that's why if you want to look at it on a holistic picture, it might not necessarily mean that it's a good thing if you think that the stock market is some sort of a telltale sign to the broader economy or how the market participants are positioning their portfolios. So that's that. Okay, hope you guys enjoyed the discussion and we'll see you in the next video. Goodbye.